Welcome back to Switzer. Isn't it good to see Maserati advertising on this show? This shows the calibre of the people watching the show. The market is giving optimists insufficient reason to feel optimistic. So let's pick the brains of professional fund manager Dr. Manny Pohl to see how he's investing right now. Manny, thanks for joining us.
My pleasure as always.
Well, it's been great. The market has been good to us. It's kept going up. It's kind of 5,500 is not a great area for it, but the VIX in America is really, really low. When it gets really, really low, sometimes you get a lot of volatility. Are you worried at the moment, Manny?
No, quite the opposite. As we were saying before we started the program, we're about to bring a listed investment company to the market, and that's in the troublesome part of the market, which is the small to mid-cap area.
Yeah.
And if one was worried about the market, you'd say, hang on, I don't think we should be talking about that. So,
yeah.
No,
so what are you going to call this? Pohl's Fund? What are you calling it?
No, it's called Barrack Street.
Why Barrack Street?
Well, because the office is in Barrack Street, just off Martin Place.
Okay, all right. Very English sounding, Barrack Street.
Yeah, I know. It sort of appealed to me in a very... maybe we'll try and attract some English investors, but no, it was just because that's where the office is.
Okay. So it's going to be small and mid-cap companies.
X50, everything outside the 50.
Now, Manny, you've had a history of loving dividend-paying stocks.
Yes.
Are you going to go for dividend payers in this area as well?
Dividend payers in terms of those companies that have the ability to grow. So we were always classed as a growth manager, but in the stocks that were paying dividends.
Yeah, because you know that a big chunk of your total return is dividends.
Yeah, and has been for a number of years now. But the small to mids that we look at are what we deem quality, and those are essentially companies that have got an earnings profile and a dividend profile. So it's not the speculative miners and the biometrics that are out there trying to prove something. No, it's companies with proven earnings and proven dividends.
Will there be high-tech companies in there like Seek and REA?
Oh, you keep talking about those favourites that have made
well, they were good for you, weren't they? They were good for you in the old days, but is there any potential left there for an up-and-coming lick person like you?
Well, look, those are still on the front line of where we're investing, clearly, because they're great companies and still growth opportunity. Yeah. But there's a couple of new names in there. Domino's Pizza is one, where you've taken an age-old fast food and added technology, and people are all ordering it online.
We've been big supporters of Domino's, and they've delivered.
Yeah,
nice to see. Yeah.
And another one that's in the portfolios, which we've disclosed, is Big Air. So they're a small company, technology-based.
Big Air.
Big Air, yeah.
Now, a lot of my viewers wouldn't know it. Tell us about the company.
Well, it's a technology play. It's in the same. It competes with Telstra with Wi-Fi. But their main product that they were offering was in the mining industry, point-to-point communication.
Yeah.
So what it does is that it prevents hackers coming in, so you can have a more secure communication.
Right.
It's in point-to-point within the city, so they would have towers and you could communicate. So it's offering you Wi-Fi to people like ourselves, but they're a niche player and their service levels are unbelievable.
And I guess when Macquarie Telecom started off, its service levels was what they tried to push out there, competing against the big guys, and it was very successful. And I guess M2 was the same.
Well, I mean, the interesting thing is we knew about their offering, and they were in universities delivering Wi-Fi to students in the campuses.
Yeah.
And in our office in Queensland, I was in the lift, and I saw this guy with a Big Air logo. So I said to him, "What are you doing here?" He said, No. We're actually delivering it we've got a wider footprint." So I said to the guy, "Well, get somebody to call me." Within half an hour, their marketing guy called me. Within a day, we had signed a contract, and within 2 weeks, they had installed it in our office, and we were running. And that's just what people are wanting.
Okay. So how many stocks will you have in this fund?
At the moment, we've got 16.
Okay. So you've been doing it privately to prove the model, I presume?
Well, as you know, we've been, I've been managing money in Australia for nearly 20 years.
You're the Hyperion guy.
Yeah, that's right. Well, that was that's the old world. The new world is ECP with Barrack Street. But we have an approach where we whittle out the universe and we reduce it to a universe of stocks that we like.
Yeah.
If you just strip out those in the 50, you get to the universe that we're looking at. So it's the same stocks we've been looking at all along, but just not including the hundreds. And how did we get there? Well, the real value that we created, which over since inception and over the past year has been 28% the portfolio versus 14% in the market.
Yeah.
the hundreds actually detracted a bit of value in that performance, the excess performance. It was
The
all
top
in
100
that,
have.
Yeah, it was all in the X50, which is those small to mid caps, which I'm talking about. Yeah,
How far down do you go in the top 200?
no, we go all the way. If we think it's a great business, we'll buy a little.
You'll buy one in the top 300?
Yeah. Yep,
Okay.
all the way.
Okay, so Manny, why should people trust you? Apart from the fact you've had a good track record at Hyperion, Hyperion wasn't small and medium, was it? It was basically you went for the companies that you thought that could return the best quality dividend, and it happened to be a lot of dividends. Why should people believe that you're going to do well in the small and mid cap?
Because they can take that track record and they can break it into the two groups, the 50 and the X50. And the numbers are there to support that the real money was made out of the X50.
Now, an important question, I think, is a lot of people have invested in dividend-paying stocks. We talked them into going into them, and now we're kind of hitting high levels. They want to try and find something to get set up for the next leg up. Is that what you're trying to position your firm to be, looking at those sort of stocks that will benefit, say, when the Aus dollar comes down and a new kind of growth comes back into the economy?
Yeah, absolutely. I mean, the biggest problem for anybody who's got a self-managed super out there is how do they get to the additional outperformance over the market? And what we're positioning ourselves for is to say to people, we know you've got the CBAs, we know you've got the BHPs, we know you've got the Rios. There's an opportunity for specialists like us to analyze the small companies, and a lot of people who don't understand them can really burn their bridges.
Yep.
So we're offering a product that is well managed by a team that researches them, and that'll give them the opportunity to add the sexy bits to their portfolio.
Okay, one last bit. What are you going to charge us for all this fantastic work? As my viewers are saying, it's all very well, Manny, talking. What's he going to slug us for?
I mean, retail people always get slugged at the end of the day.
Of course they do. So what are you going to slug us?
The LIC is a 1% fee, which is an institutional rate for a small to mid-cap manager.
Yep.
And then there's a piece of outperformance versus the benchmark with a high watermark. But no, we're offering it at institutional rates, so it's not like we're going to charge the 2 or 3%.
And at the end of the day, they're going to be punting on you in the stock market, aren't they?
Yeah, well, that's right.
Okay, mate. Manny, thanks for joining us on the
Thank you
program.
so
And
much.
good luck with it. I'm sure we'll get you on the show talking about your great achievements in the future. After the break, the headline in the Fairfax Press today was bankers issue a storm warning. So should investors be scared of savage stock headwinds ahead, or is it just a bluster? George Baburis will tell us about his stock market forecast next.